All right, welcome back. Adobe is standing out as one of today's big tech laggards, down almost 4%. That is Citigroup downgraded the stock from buy to neutral, cut the price target to 313. What do you think about this? So Weiss, you bought it.
Yeah, I bought it and I sold calls against it. So if it works out, I'll be into the stock at about 264. Hopefully it doesn't work out that way. Hopefully the stock goes higher and
premium
the calls come back.
Gets off the Adobe train. I think this is another one of Cramer's Cloud Kings.
Yeah, look, to me, Adobe is a phenomenal company with this moat around it. Everybody uses Adobe. I read the report. It sort of makes sense on one hand. On the other hand, he's still carrying higher earnings estimates than the other analysts and consensus. So I don't care that much about this quarter. I'd like to buy more. It's by no means a full position, but it's not cheap. It's never going to be cheap, nor should it be cheap, because they own this business. So there are lots of others out there who have tried to get into it, never worked out. I think any time you can buy a stock that is on sale, and this one's on sale relative to where it just was, you buy it. And he's still got some nice upside to the target.
Joe, you mentioned this name several times over the last many months.
Quite a bit. It's a name that, if it pulls back further, on a valuation basis, I think it's a must name to own. Overall, software is clearly struggling right now. And it shows the resiliency overall, the S&P, that the S&P is able to hang in there today. You've got small caps that are strong, but to lose tech software, to see a Twilio down 4%, Zscaler down 4%, which I know Stephanie Link talks about. Salesforce can't seem to get out of its own way. So tech software is struggling right now. But I think on the other side of that, it's going to provide some opportunity. And lastly, Slack, which, Josh got me in. That's another one.
I bought today.
I bought
it today.
Oh, boy.
I don't agree with that name at all.
I'm in
that
trouble.
name is a name that came out. Microsoft went after them. They beat them almost immediately, and they'll continue to beat them, I think. And that's the pressure that they got on them the second they came out as an IPO. And look at that stock's performance since the IPO. It's one of those that I think you got to watch close.
Right,
I bought it as a trade, and if it doesn't work out, I don't mind having a reason to yell at Josh for something else. But
You blame it on
I think oversold today.
You didn't buy it as a trade.
No, I bought it because of, I thought Josh made a very compelling argument on Slack. I thought a lot of the fundamental arguments that he presented were strong, but you can't ignore the performance of the stock. And the concern is that you have so many people that are now you're in the stock, I'm in the stock, Josh is in the stock, Mike Francesa is in the stock. I mean, everyone's in the stock. It just keeps going lower.
Look, the way I look at it, Josh did put up a very strong call on it. I was waiting for an opportunity. And Josh knows what he's doing. I mean, this is his backyard. He knows these names. He's done well in them. So why not make a bet?
Here's the but part of that, and that is that there are lots of companies that I like that I don't want to own. I use their service all the time, and I don't want to own them. And this is one of those, to Pete's point.
This is Uber.
I don't want to buy Uber. I don't want to buy Lyft, even though I use the services all the time. Yeah. So just because you like the stock and are very familiar with what they do doesn't mean it's a great investment. And this one right now at this valuation,
they profitable?
I think it keeps coming down into the teens, this particular name.
Wow.
If it gets down there, then maybe I'll take a shot, but not at 25 where
I've got to stop on it. I mean, it's a trade, so I've got to stop.
I'm going to have a stop as well. Another IPO darling, Zoom Video, ticker symbol SM. Look at where that one is right now. ZM, apologize. ZM, $67. That one has come down significantly. Again, universally, everyone applauded that name when it first came down. Now here it is, $67.
Because the path to profitability, and I bring that expression up all the time, is not there for so many of these names, whether it's Uber or whether it's Lyft or whether it's Slack. When did they make?
Zoom was
Tell us when you're going to make. Well,
Zoom Video was profitable. You're correct.
There are some names out there that have some profit, but a lot of these guys are really, really struggling to show you how and when they're going to make money.
And yesterday, Workday, Scott, just to wrap it up, they had an analyst day, and people just started selling everything related to that at all. Any peripheral relationship to that, they were selling because that was a horrible analyst day. That stock's down 11.5%.
This is the Uber impact. This is the Uber impact.
Right.
On the market, period.
But this is also a valuation.
Impact too.
I mean, Weiss, you're buying companies like you won't buy an IBM that has a moat.
Go at him, Sarat. Just
it has cash
take
flow.
the gloves off
You're
already.
You're going to buy a company that's price to sales. Like
take the tie off if you need
why
to.
don't the price to
Story
sales
changed from where the stock was 250.
Okay, let's talk about
because the earnings have come down
with
your
stock, right? Your stock could go to 12 and still not make any money.
That's why I have a stop on it. That's why I have a stop on it. Look, the CEO of IBM is not done a great job.
Let's talk about like your price to sales model in a market.
But you can't forget about that. How do you forget about that?
How do you forget about price to sales?
He's 38.
I'm not forgetting about price to sales. I'm looking at a stock that I believe was emotionally sold today.
So it's
So it's a trade.
So when do you get out? What price?
Hopefully, I don't get out when it gets hit.
Where's the stop?
Where's your stop?
The stop's a buck below where it is.
When Josh tells us to get out.
There you go.
It's all about Josh.